Support and resistance Forex trading strategy. In this video, we are going to explain and demonstrate Forex trading using support and resistance levels.
Subscribe to this channel for more videos so that you don't miss any update.
Horizontal support and resistance Forex trading strategy is one of the popular Forex trading strategies you as a trader must know. Used by most traders all over because it is based on solid trading fundamentals of support and resistance. Here, in this video you will learn how to trade support and resistance in the Forex market. This support and resistance trading method forms the principle of all support and resistance trading, so it is paramount to know it. How to find support and resistance levels. How to find support and resistance levels. Irrespective of what time frame you use, whether it be 1 minute or 5 minute or weekly, you will see where price has progressed up, hit a resistance level and retreated. Or price has moved down, hit a support level and bounced back up. Those are the very simple concepts of support and resistance. So if you don't know how to find support and resistance levels in a chart, the following steps will help you. Let me demonstrate how to find support and resistance levels in a chart. Watch. Look for a series of low points where price does not fall below it any further, that is the support level. Look for a series of high points, where price does not rise above it any further, that is the resistance level. The more price bounces off this support and resistance levels, the stronger these levels become. The more price bounces off this support and resistance levels, the stronger these levels come to be. So next time price comes this level, assume it to bounce again like it did before. Don't look for a breakout, because you will have many false breaks, or fakey. But always look for a reverse of the price, most of the time. You will see how profitable your trade will be. The demonstration is easy to understand. Time frames, preferably 15 minutes and above. Any currency pair can be okay. Indicators, no Forex indicators required. The use of bullish and bearish reversal candlesticks can improve your trade entry signal. Buying rules. After a support level is known, draw a support line and wait for price to drop back to that support line. When price drops back and touches the support line, wait for that candlesticks to close, and place a buy stop order, 2 to 5 pips above that high of the candlestick that touches the support line. or place a buy limit order, so when price reaches it, it triggers it and opens a position for you. For buy limit orders, or at market orders, place your stops 10 to 30 pips below the support line. This depends on what time frame you use as well. Larger time frames may call for a greater stop loss. Selling rules. After a resistance level is known, draw a resistance line and wait for price to push up to that resistance line. When price moves up and touches the resistance line, wait for that candlesticks to close, and place a sell stop order 2 to 5 pips below that low of the candlestick that touches the resistance line. Or place a sell limit order, so when price reaches it, it triggers it, and opens a position for you. For sell limit orders, or at market orders, place your stops 10 to 30 pips above the resistance line. This depends on what time frame you use as well. Larger time frames may call for a greater stop loss. Advantages of support and resistance Forex trading strategy. The use of price action trading, especially the use of reversal candlesticks, will greatly enhance your trade entry. Let us look at these reversal candlesticks, to enable you identify them, at the resistance and support levels. In sidebar candlestick pattern. Engulfing candlestick pattern. Pin bar candlestick pattern. Morning and evening star candlestick patterns. Tweezer candlestick patterns. Go to my channel for a detailed explanation and demonstration in video of all reversal candlestick patterns. Some Forex traders trade this setup And it is quite predictable what price does around support and resistance levels. It bounces off from these levels and goes up or down, as case may be. So it's easy for a trader to target his entry with less risk. Stop loss is tight and placed at best locations behind support and resistance level. Hence less chance of getting stopped out prematurely. Great risk to reward ratio for trades go according to plan most of the time. Disadvantages of the support and resistance Forex trading strategy. It is not 100% certain. Price can break the levels and not obey them. You can see it did not obey the resistance level here, so if you had put a sell stop or sell limit order, none will be activated. At times, there will be false break of the level or spike, only to obey it later.
Subscribe to this channel for more videos so that you don't miss any update. And don't fail to hit the like and share buttons so that your friends can see it.
Please drop your comment below.
Thanks for watching.